G'day everyone, welcome back to Pete's Investing. Today's June the 1st, 2023. This is the New Zealand Canadian dollar currency update. Now, it has broken down on the weekly slightly on the CCI, but we haven't actually got a bearish signal yet. So it's in a neutral positioning at the moment and likely going to break into a bearish signal sometime soon. Now, again, we look at the longer term trend combining with the daily trend to give us a more confident trading. But notice it's on the daily as well. It has been in this channel for some time now, for most of 2023, and it's now bouncing or broken through this lower descending trend line. But notice back here in terms of the Fibonacci retracement level, it's actually hovering around the 50 to 61% level, and that's going to be a key area potentially for a bounce to the upside, or even if it breaks through that, we're going to see further declines closer to this support level down here. You'll notice on the daily, our indicator is showing a bearish signal, so primarily bearish trades based on the daily trend. To have more confidence though on the lower time frames, ideally you need to have the weekly and daily in alignment. You can still trade on the daily, as I say, so don't take me too literally. You can still trade on the daily, but it gives you a better probability if you have the weekly and daily in alignment. Likewise, you can trade just on the hourly or any time frame in isolation, but again, you're restricting your probabilities. So if you look here on the hourly as well, just looking down here on this price chart for a moment, there is a minor support forming, and if it bounces from there, well, that may confirm that support level as well on the hourly at least. So also I've got up here the some back tests, the long program, but also a short program showing you the effects of trading against the flow. So had you, for example, traded during this period, your profitability going long would have been nice using long trades only. And again, trading during this period long, you would have had an effect on your drawdown and you would have averaged down. We don't use stop losses, but you can see there, had you gone short during that period, that would have been single entries and exits, and that would have increased your profitability. So again, the idea is to trade short, obviously, when the price declines, and avoid trading long when the price declines, and vice versa. Now you might ask, well, how do you differentiate between how to avoid going long here? Well, as I always say, you must trade long when both the daily and the weekly are aligned. So during this period, obviously there are no long signals, so you would avoid going long during that decline. Back here, during that little period, there were long signals primarily on the weekly, and during that period, the same period, you would have gone long during those few instances back there. Likewise, going short, there were no short signals, but there were predominantly short signals on the daily had you traded on the daily primarily on a smaller time frames. So to understand this and other trading strategies in more detail, reference our Patreon page, links in the description below. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.